A very good morning to you. Happy to be here to discuss with you global supply and demand fundamentals. What is going to change? Uncertainties. How do we see the palm oil prices moving from here? We are independent. We don't have any positions. Analyzed the markets now for 60 years. And we really find out that it's important to do this on a monthly or quarterly basis, not annually. We have to try to understand where are we at the moment. Prices of palm oil went lower than we thought. We were almost approaching 10-year lows recently. Part of the weakness we have seen was caused by India, the biggest importer, with several import tax increases and higher prices on the domestic market. Indian imports plummeted by 0.7 million tons from a year ago in April, July, and world imports of palm oil were also down sharply. This was one very important bearish impact. It resulted in higher stocks in Malaysia and Indonesia and contributed to the price weakness. Markets were ignoring to a certain extent that in many importing countries, stocks are actually low and down from a year ago. In Indonesia, prices recently fell to $530. For the producers, prices of 1,900, if we reduce the export tax, are very close to the production costs. So the current prices are hurting. And we are seeing less incentive, less expansion. We are seeing also, in some cases, less fertilizer application. The low prices are having an effect. We are of the opinion that additional price weakness is very limited. Potential for additional price weakness is very limited. We see a lot of reasons why prices should start bottoming out and getting support. As a producer, you should make sure that you have enough storage capacity to perform a trading policy. Prices are unusually low for palm oil as compared to mineral oil, as you know. This has been ongoing for quite a while. With a delay, demand is now picking up in Indonesia, in other countries. So we are slowly now seeing stronger demand in the energy market, and world biodiesel production is probably rising by 3.5 to 3.8 million tons in the current calendar year, with biggest growth rates in Indonesia, in Brazil, in the US, and also in the European Union. We are having higher production. China is taking more biodiesel, as you know, imports a lot biodiesel now from Indonesia. So demand is picking up. This should be seen soon in higher export numbers also from Indonesia. Let me first look at the oilseed market. First, we see strong, very strong demand worldwide for soybeans. At the moment, the world requires 1 million tons of soybeans every day. Very strong demand. You see this over the past couple of years, a doubling of production of soybeans in less than 20 years. Soybeans are accounting for 62%. The soybean outlook at the moment is bearish. We are producing considerably more than we are consuming. Soybean prices are on a downtrend. We expect this downtrend to continue. Palm oil prices and vegetable oil prices have been relatively weaker than oil meal prices, a scenario which is likely to change for the next 12 months. There will be downward pressure in the meal price, with meal being pulled down by the weakness of soybeans, and oil will have to finance a larger share of the crush value. Indirectly, oil is getting support by the oil prices are getting support by the weakness in meal. Several factors are affecting price. Government decisions, of course, supply, demand, weather, financial markets, weakness in the currencies of emerging markets contributed to the bearishness of vegetable oils over the past couple of months. And of course, the US-China trade war created a lot of uncertainty, and this uncertainty is tending to reduce prices. Probably the market is underestimating the demand of soybeans from China. Probably. China will have to import US beans. The question is, under which conditions? Now, we think that for import in October, March, China requires something like 15 million tons. 15 million tons of US soybeans for import in October, March. We just don't know how this is going to happen. Will China decide to announce a duty-free import quota? Will China make an announcement to temporarily eliminate the import tax of 25% on US soybeans, probably saying this as a goodwill action to improve the atmosphere for the trade consultations which are going on, which have not been very successful over the past 2 days? Is China trying to stimulate the talks by announcing a temporary elimination of import taxes on US soybeans? We don't know this. But what is very likely, China will have to buy soybeans in the US to satisfy its requirements, because South America is largely sold out. It doesn't mean that they are not exporting anymore. They continue to export, but South American exports will be down from last year. So China has to fill this gap with US soybeans. I think they will start buying very soon. We don't know when, but it could be within the next 2, 3, 4 weeks. And if this happens, it is a factor which will support soybean prices temporarily. Because I think the majority in the market, most of the participants are not expecting China to take much US soybeans. I think they will have to take a lot until February. So, and still, even if they import US soybeans, the total import volume will be down from a year ago for October, March. And crushings are declining. So soybean prices are under pressure. The US farmer has lost approximately 20% in the soybean price. US soybeans are at a discount of 40, 50, 60 US dollars as compared to Brazilian soybeans. So the US is suffering a lot as a result of the trade war in soybeans. US government is compensating this, as you know, with a support for US farmers. Crushings in China, we think, will stagnate, probably decline slightly for the full season. This is going to affect the global market. China, by far the biggest crusher in the world. We expect a decline in processing in October, March, and at best a stagnation for the full season. And this will shift Chinese import pattern of oils and meals. Very important. And it will support, on the other hand, crushings in the US and in other countries. Most likely, Argentina will soon start exporting soybean meal to China. We think it could be 1.2 million tons, not more. More sunflower meal, more palm kernel meal, but not the quantities the Chinese are talking about. There are estimates from China of 5 million tons of annual imports of palm kernel meal or 5 million tons of sunflower meal. This is simply not available. But some switch is taking place in the next 12 months. Additional shifts could happen over time, and this is having an effect on the global supply demand and the global trade flows. Considerable changes. Soybean meal consumption in China will probably just be flat or decline slightly. And as a result of that, we will lose world consumption growth because of China. China accounts for the bulk of the world soybean meal consumption. Soybean meal is the backbone of the livestock industry, and what we may see is that in the short term, the Chinese livestock sector will be faced with a reduction of soybean meal consumption in favor of feed grains or other feedstock. And we will lose soybean crushings, and we will lose soya oil production growth in the world for the next 12 months. So it's also spilling over to the oils and fats sector. Palm oil, soybean oil should be major beneficiaries. We see soybean oil imports rising to 800, palm oil imports to probably 5.6 million tons. We haven't seen much additional Chinese buying so far, but I think it's going to come. This could be one factor supporting palm oil prices in the next few months. 9 million tons, we think, will be an estimate for Chinese imports of oils and fats. Just coming back to soybeans. The global soybean market is facing a surplus if we get normal weather conditions. The world supplies were tight in 17-18 with a decline in production by 10 million tons and a decline in ending stocks. But for the new season, 18-19, we see a rebound in world production by 24 million tons and in stocks by 10 to 11 million tons. So we have an oversupply, and this oversupply comes from two sides: higher production with normal weather and a slowing down of the consumption growth because of China. Yeah, we see only a below average growth in world crushings of soybeans, rising only by about 7 million tons as compared to 14 million ton growth for the average of the past 5 years. The US, we are conservatively estimating the crop at 123.5 million tons. It could go as high as 125 or even more. Ending stocks will be burdensome, 18 million ton or more. This is unprecedented and is likely to be bearish for soybean prices. We may see soybean prices falling in the US to less than $8, approaching production costs, or in some cases going below production costs. Argentina, recovery, but the recovery in Argentina will be relatively limited because farmers are switching area in favor of grains, wheat and corn. The Argentine crushing industry has lost the protection because of the fact that the government has eliminated the export tax advantage. Soybean oil, soybean meal, and soybeans will be taxed at the same level from early 2019 onward. And as a result of that, we could see Argentine soybean exports rising to 7, 8, or 10 million tons next year compared to just 1.5, 1.6 million tons in the current year. So there could be a shift in Argentina towards higher exports of beans to China, less of an increase in crushings, and as a result of that, lower than expected, lower than normal exports of soybean oil and soybean meal, affecting trade flows. Yeah? Brazil, a larger crop, a new record, little change in exports, very low opening stocks, but Brazil will be the major source for China for soybeans also next year. And still, at the end of next year, from September onward, China will again be dependent on US soybeans. Rapeseed, relatively tight supplies. Rapeseed production has been falling for the past 5 years. Very poor crop in Europe at the moment. Chinese production still depressed. Overall, a declining availability. This is keeping rapeseed prices at a premium. Rapeseed oil prices very high in Europe and on the world market at a premium to soybean oil and sunflower oil. Sunflower seed production is booming. Farmers in Russia and Ukraine are making very good money at current prices, and they are expanding further. Advantage, low production costs, significant increases in yields over the past couple of years, new record crops coming, and exports are rising. And this explains that sunflower oil prices are depressed, big discounts relative to soya oil and rapeseed oil. Sunflower oil is taking market share from palm oil at the moment, or is competing with palm oil in many importing countries. Now, going to the oils and fats sector and palm oil. What are the impacts on palm oil? Very clearly, growth leader, production leader, but the dominance of palm oil is being threatened for the next couple of years. Exports, very clearly, Indonesia, Malaysia, all oils and fats, they are the reserve bowl for the world. We all know this, but are we going to continue this trend? This is probably the key question. And I have my doubts, longer term. But let's first look at the current situation. And I want to put this in perspective. And I come from Germany, from Europe, where palm oil is under considerable criticism. Now, people often do not put things in perspective. And here, yes, we have seen an increase in the palm oil area by 20 million hectares, which is a lot. But it's only 0.4% of the total agricultural area. The increases in soybeans were much bigger, with 80 million hectares increase, and also in sun and rapeseed were higher, considerably higher. Yeah, so we have to put everything in perspective. Now, the palm oil market is facing severe challenges, and one of the biggest challenges is lack of replanting, creating below potential yields for quite a while. Yield curve, the yield trend is declining. And this has just been seen in Malaysia over the past couple of months. Production in Malaysia in June, in July, and again in August is significantly below last year. Even if the August number is up 10 or 15% from July, it is far below what was produced last year. So yields are declining yield. The strong recovery we have seen in palm oil production last year and in the first 4 to 5 months of this year was temporary, is not continuing. So we had a success story over the past 40 years, or over the past 35 years, and this success story is in question. On a world basis, world production of palm was virtually flat, did not increase from a year ago in April-June. I'm sorry, in July-September. This is our forecast for July-September. Despite increases in Indonesia, we have reduced production in Malaysia, in Thailand, in Colombia. This trend of a slowing down in production is continuing in 2019. Now, for this year, we see the production at best at 19.8 million tons. It's probably only 19.6. The trend, the most recent trend, would rather suggest 19.6 million tons. But we are conservative. For 2019, big question mark behind this 20.4 million ton production. We will probably not see this. Yeah? The high stocks we have at the moment are not a result of production, of high production. It's a result of a temporary weakening of world imports. Yeah? And the low export number we have seen yesterday for the first 25 days of August is, I assume, a reflection of high exports from Indonesia, which we don't know yet. Yeah? So there's a slowing down of the growth in 2018, 2019. This does not yet create a shortage because stocks are still high. We are still producing slightly more than we are consuming, but the growth rate is slowing and the growth rate in consumption is picking up. So sooner or later, the consumption curve will exceed the production curve, and then we have also a fundamental justification for higher prices. The global perspective, palm oil, still by far the biggest oil, with 31% of total world production. And palm oil accounted for, still for 40% of the growth we have seen in the past 25 years. Significant. But it is produced on only 6% of the area. And if we include palm kernel oil, it's 34% palm oil, palm kernel oil of total world production produced on just 6% of the area. Biodiesel, very important at this very moment. 15% of world consumption of oils and fats is going into biodiesel or biofuels at the moment. Global consumption growth of all oils and fats, 7.1 million tons per annum. What Paul indicated before, very, very strong global demand growth. We probably forget this when we look at the development of the past 3 months, when we had a temporary slowdown in trade volumes and export volumes, and a temporary building of stocks above expectations. The trend is very significant and is continuing, demand is continuing to rise sharply in the current year. Out of this growth of 7.1 million tons per annum for the average of the past 5 years, 2 million tons per annum was for biofuel. So in conclusion, growth rates in palm are slowing down from 7.5 million tons in 16-17 after the El Nino year, slowing down to 3.5 million ton growth last season, or this current season coming to an end, and about 3 million ton growth in October, September 18-19. Soybean oil production is slowing down because of China. The, at best, stagnation in Chinese crushings is a major factor. So growth in soybean oil production is slowing down, a pickup in sunflower oil, and a further slowing down of the growth in rapeseed oil. Palm oil consumption growth is approximately 1 million ton higher than the production growth. We expect world consumption of palm oil to rise by 4.0 million tons in the next 12 months, in the food and in the biofuel sector, both. Yeah. So higher growth on the consumption side. For all oils and fats, similar situation. Consumption growth is exceeding production growth. But we still do not have a shortage situation for the next 12 months because of the high carryover stocks. So any recovery in oil prices will be moderate as long as we have normal weather conditions. Yeah? There is no reason to expect any shortage at the moment if we have normal weather. Stocks are building, and we are still expecting a further recovery in stocks in the new season 18-19, but limited. We are slowly replenishing the stock drawdown of 3 years ago. But in relative terms, stocks relative to world consumption, in relative terms, stocks are not burdensome for oils and fats. And this is, I think this is important. If we just look at Indonesia, if we just look at Indonesia, Malaysia, US, where vegetable oil stocks are high at the moment, we are not getting the message. Worldwide, stocks relative to consumption are comfortable, but not burdensome. And stocks of 2.2 million tons for Malaysia are a level which the market needs. and 4 million tons in Indonesia is a level the market needs. If you look at the monthly production volume and the monthly trade volume, this is a workable, this is a necessary level. So we have to put also here everything in perspective. The price weakness, and I said this, the price weakness we have seen over the past 4 to 6 months was to a large extent linked to a slowdown of world imports, which is going to be temporary. Stocks are low in many importing countries, and there will be a pickup in purchases and a pickup in imports in the months ahead. And this will help palm oil prices to build a bottom and soybean oil prices to build a bottom and recover moderately. Support will come from a rising demand for food and energy sector and a slowing down of the production growth. Biodiesel production is now accelerating with the latest decisions in Indonesia to raise the mandate and to enforce the mandate. We expect biodiesel production in Indonesia at 4.7 million tons this year as compared to 2.9 million tons last year. There is likely to be a big increase also in Brazil, 0.9 million ton increase in Brazil, some increase in Malaysia, in the US, in Europe. These 4 countries alone are likely to increase their biodiesel production by 3.5 million tons. Most of the growth is taking place in Indonesia in the second half of this year. This situation with palm oil prices below gas oil by more than $100 is unlikely to persist. I personally consider mineral oil prices as too high. I would not be surprised to see some weakness in the crude mineral oil prices. So some potential for a setback here, but I also expect that palm oil prices will recover to close this gap. Yeah? It's too weak relative to energy prices at the moment. Futures on the Bursa, 2,100 I think is the lower limit. Upward potential, moderate 2,400, 2,500, not more for the next 6 months. Swing factors to watch. Of course, monthly palm oil production. We are very concerned that August will again be down from a year ago and that we are losing more production than expected for the full calendar year. Other swing factors, timing of import purchases, China, India, other countries, and the energy demand. Lauric oil prices came under significant pressure. This, in my opinion, is not unexpected. We pointed to this. We pointed to the increase in world supplies, which is quite significant at 0.9 million tons for the 2 lauric oils combined, increase in world supplies as compared to only 0.2 million ton increase last year. And in this small market, such a change on the supply side cannot be marketed with a premium, with the high premiums we had at the beginning of this year. So prices had to come down. We have now seen some price stabilization in palm kernel oil. I'm not sure whether this will stay. Coconut oil now $10, $20 above palm kernel oil only. I would not be surprised to see some additional dip in the lauric oil prices closer to palm oil in the next few months to stimulate consumption. But not much. Also, the lauric oils are likely to bottom out. Finally, I just want to repeat that the palm oil market is at the crossroads. It is not Europe which will decide about the future of palm oil and the European biodiesel policy. This is important, but this is not really so important long term. Important is that the challenges which are here and which are not new, the challenges in Malaysia and Indonesia about replanting, about the declining yield trend, particularly in Malaysia, labor shortage, the new government, that it really takes up the issue of a labor shortage. And the plantation industry of the declining yields, and that a concept is being found how you can bring the smallholders, you can convince them towards replanting and, you know, help them to replant. If this is not done, if we are losing the smallholders in Malaysia and Indonesia, this is 38% here, 42% in Malaysia, if we are losing them because they are not able to replant what they have to do in the next 5 years, next 6 years, their yields will decline further, their production costs will rise, and they will be out of business. So this is a very, very challenging situation. Replantings must accelerate. This trend of world consumption growth will not continue. That's quite sure. But the question is, how are we proceeding from 2020 onward? Will the curve be rather flat? So that is a big question. With our forecasts, and these forecasts are relatively optimistic because we think that we will be replanting approximately 200 to 250,000 hectares a year in Indonesia starting from 2020 onward, which is a question mark. And we also expect a considerable acceleration in replantings in Malaysia here, 150, 180,000 hectares per year. Assuming this, we still consider it necessary that the growth in world consumption is curbed to 2 million tons a year as compared to 2.8 million tons in the past 10 years. But this may be an optimistic assumption. And we are looking at Malaysian for the year 2025. We are looking at Malaysian production of 22 million tons. This may be too high. Or Indonesia, 48 million tons. The world requires closer to 90 million tons of palm oil by the year 2025, but we are not going to see this. So the question is, how far are we missing this goal, and to what extent will soybean oil, rapeseed oil, and sunflower oil fill the gap in the future? It is, in my opinion, longer term, a quite bullish scenario shaping up simply because of the problems in the palm oil industry, where the yields have declined over the past 8 years, and actually this year is the first year in which Malaysian yields will be below the average yield in Indonesia for the first time ever. A trend which is really negative for this industry here. On the consumption side, Indonesia is running the risk, I would say, of over-pushing, over-supporting the biodiesel. 14 million tons is what we have assumed for Indonesian consumption for 2025. If we look at the biodiesel targets, this is much higher. Food and biodiesel, this is closer to 18 million tons. Indonesia will not produce enough to satisfy this kind of domestic consumption without jeopardizing food demand, satisfaction of food demand in the world. So with this, ladies and gentlemen, with this warning, I thank you for your attention. Thank you very much.